Good morning, everybody. It is Tuesday, January 30th. We have 2 days left of January 2024, and we are back once again on another market open. Thank you, everybody, for being here with me today. We've got a very, very exciting week in the world of stocks. Obviously, we got SoFi earnings from yesterday. Absolutely crushed. SoFi earnings kind of set the mood for the market to have a nice day yesterday. And the market had a very nice day. S&P and QQQ at all-time highs. We had SMCI earnings after hours, which we're going to discuss, and I don't know how to make sense of it. The numbers are real. It's kind of hard to realize how real the numbers are, but that sent NVIDIA flying after hours. SMCI, another company that's in the semiconductor space, that got investors very, very excited, and it just proved that this whole AI thing is real, more real than we could, really possibly imagine. And today we have Google and Microsoft. I'm going to put a poll in the chat of what you guys want to stream today after hours. I'm going to do that right now. I think I own Google, so I want to own Google. I want to stream Google, but I feel like Microsoft's probably more, and I might be wrong on that. So I'm going to put it in the chat and see what you guys think. Which one should we listen to? Microsoft's probably more important than Google, but Google is I don't know. We get to hear about ads. Maybe that's fun. So let me know what you guys think and which one do we want to stream. We're going to discuss that. We're going to discuss previous to that. We got Tom Lee. He's got a ton of stuff to say. I interviewed Dan Ives on the channel yesterday. If you guys didn't check that out, make sure you watch it a little bit later today. He gave his thoughts on Tesla, Palantir, Microsoft, Apple, what he sees is going on. So that's going to be exciting to discuss. And then we got a ton of macro news that's coming out later today as well, because obviously there's a lot of stuff going on in the macro, the JOLTS report we have later today. I see a bunch of people in the chat already doing it, so let's do it because we haven't done it in 2 weeks. Comment where you are watching from. Are you from the toilet? Are you from, your TV? Are you from your car? More importantly, are you from Buffalo? Are you from Alabama? Are you from Singapore? Let me know where you are watching from, and the international audience got to step up and rep their country, rep their state. It's always great to see where everyone's going from. Han Soria, Buckar, Top Dasher, Dax, Victor, Jared, Edmund, Steph H, Danny Thomas, I Show Sad, David, Franz Baker. He says, good evening from Thailand. I don't know if you're actually from Thailand, but if you are from Thailand, that's amazing. Sanjay, thank you for being here. David, Jocelyn, Ibby, 2A, John, Benny, Sasky Rose, Kaios. Look at Kaios with all those caps locks. I love it. Good morning, Palantarians. Good morning to you. And we got to talk about Palantir for a little bit as well, given some of the stuff I found out about them yesterday, especially some of the stuff going on in their government business. The Wall Street Journal put that hit piece out about them. It wasn't a hit piece, but you know what I mean, last week. Palantir's government business is actually not doing that bad, so we'll talk about them. Miami Ren, Mr. Seymour Duck, Alex, Steve, Mr. Russo, Kevin, Garcia, Broccoli Bob, Brad Appeal, morning from Northeast Ohio. Time for the market open. Thank you for being here all the way from Northeast Ohio. All right, we got Anaheim, California in the house. We got Nebraska, the Netherlands, Singapore, Chicago, Minnesota. Minnesota is people who are the nicest, right? That's what I've heard about Minnesota. You're just the nicest people. Toronto, Hong Kong. Are you going to hold Google through earnings? Yeah, I have spreads till 2026. So honestly, I think by 2026, Google will be at least $200. And so going to be holding those for a while. We got Broccoli Bob from my kitchen, probably making some broccoli tonight. Ashwin, watching from the car, drive to work and traffic on the Bay Bridge. Oh, I love it. That's amazing. That's amazing. We got the couch in Dubai, couch in Miami, my apartment in Manhattan, Idaho, Tallahassee, on my lunch break in the UK. This is fun. This is great. Nebraska, Virginia, New Jersey, Indiana, Indianapolis, Palm Beach, Florida. I love it. Thank you all for being here today. Honolulu, Philadelphia. All right, let's get into it and let's discuss what's going on in the broader market. So first thing is, we got a lot to talk about. I'm going to bring up Tom Lee. He had some interesting stuff to say on CNBC yesterday. Let's hear what he has to say, do a little bit more macro stuff, talk over the macro data that's coming out today, and then we'll get into some specific companies. So here's Tom Lee on what he had to say yesterday.
When you came on last call last time, you made an interesting prediction. I want to play that. Here it is.
I think it's possible that we make a minor new high before the end of the month, and then we might have something like a 7% drawdown.
Since then, the Dow and S&P 500 have hit record highs. I think we're on track now for 5 days of new records. Are you still predicting a pullback, and what would be the catalyst there?
Well, as that clip said, we expected new highs by late January, which was on schedule. And I think this week is going to tell us how much further we go. You know, we were sort of penciling in 5,000, and we could maybe go higher. But from there, yeah, I think an air pocket forms because one, as you sort of point out, investors will get nervous about the Fed, and when they start tightening, and parabolic moves, which we've had since October of 2023, usually end in a pretty big retracement. So I do think we continue to be strong, but then, yeah, then after that, I think there's a big air pocket.
So we've talked a lot about the Fed here. Let's talk about earnings. You've got Alphabet and Microsoft tomorrow. On Thursday, you have Amazon and Meta. We've seen these big tech companies really focus on efficiency and where they're spending and where they need to pull back. And it looks like restraining some of the spending where jobs are concerned. What do you expect out of earnings and how might that propel the markets?
Well, this is the biggest week for earnings. I mean, 108 companies report. The FANGs are reporting, you know, both Tuesday and Thursday. And, you know, these companies, I mean, they're big, but they do operate in different spaces. So I think if you have disappointments, let's say you have something disappointing from Apple, I don't think it's going to necessarily weaken the market broadly. It's going to hurt anyone who owns it. But I think for the most part, I think earnings have been delivering. I mean, this has been a pretty decent earnings season. And I think it's really confirming earnings this year should be up double digits.
What about the jobs report? What are you expecting to come through in that? Because the layoffs, they have been so headline grabbing, but you know, we've seen such a labor squeeze from smaller businesses. It's not clear that they're eager to do layoffs.
You know, the jobs report is getting harder to predict, right? Because the response rates are lower, and there's been a pretty big divergence between the household survey and ADP and the jobs report. So it is a little bit of a crapshoot to see, but it's still important. And you know, I wouldn't want to see a really bad report. I wouldn't want to see negative jobs, but a softening jobs market would be good.
Tom, it's great to see you on this Monday. Thank you for.
Dog, you know who she looks like? She looks like that girl from Pulp Fiction. The main character. The one that like kills everybody or something. She's a I haven't watched Pulp Fiction in a long time, but she looks like the hair. She looks like the girl from Pulp Fiction. Okay, so what Tom Lee is saying, I think, is actually very interesting because in mid-January, early January, him and Fundstrat basically predicted that the S&P and the market would go to all-time highs by the end of January. Okay, so here we are, end of January. S&P. Let's just pull it up real quick, and then want to go through a couple other macro things. Then we'll get into specific companies. S&P 500. By the way, GM crushed earnings. They're up 7%. So if you're a GM owner and not a Tesla owner, you're doing well on GM today. S&P 491. I mean, we are $10 away, 10 points away from what do we got? From 500 on the S&P, right? I mean, like that's kind of crazy, right? The fact that we're that close to it. So, and then you got QQQ obviously doing well at 428. Now, I really do think that, and I could be so wrong on this, but I think Tom Lee is right. I don't know if these markets can sustain this much premium on the valuation. And, you know, the earnings growth today from Microsoft and Google, God hopes that it actually justifies the premium that we're getting. But it's not like we're having multiple contraction that's unwarranted. It's not like this is not real. It's not like this is 1999 or anything, but it is coming up really quick. I mean, NVIDIA being up, you know, $400 billion or whatever, it's up $300 billion in the past 3-4 weeks. It's real, but it's like, dude, NVIDIA was at 470, struggling to get out of that 470 range. Now it's trying to hit 650. I mean, at what point does NVIDIA get to 700? And we're like, oh yeah, 600 was a long time ago. I don't know. And the only thing I know is that when something happens that quick, that fast, people tend to take profits. Now, granted, NVIDIA is turning into a monopoly. I was listening to Brad Gerstner yesterday from Altimeter Capital. He has some really interesting thoughts about how AMD is exciting, but it's just not the monopoly that is NVIDIA. So, you know, is there really a reason to sell? Probably not, given that NVIDIA is just getting into their growth phase. But you would imagine that profits are going to be taken, especially if there's a little bit of a pressure to the downside. So the question becomes, what creates that pressure to the downside? Is it macro or is it profit taking? And the funny thing is, we saw the profit taking in the beginning of January. We saw a 5% pullback, a little bit less than 5% pullback, which wasn't really a pullback, but we did see some pain when the S&P hit 468, and that was primarily due to profit taking. It wasn't really due to macro. Then we got a hot CPI, but then we got a slightly hot CPI, but then we got a really good PPI. Then we got a really good core PCE. And now the Fed's going to talk tomorrow. The Fed's probably going to pause. If Jerome Powell says anything remotely dovish about how inflation is going down the drain, stocks still have room, I think, to continue to move to the upside. We got the 10-year right now at 4.07%. That 10-year is actually down over the past couple of weeks from 4.18 to 4.057. That bad boy comes down to 3.9. Equities don't get that attractive. Equities become way more attractive than the 10-year or than a money market fund. We got some money market updates as well. This right here, total money market fund assets decreased by 1.39 billion to 5.96 trillion. So we got another decrease in money markets. Not a major decrease, only $1 billion, but I mean, this number is still insane. There's 5.96 trillion that's just on the sidelines, and they're going to want to come in eventually at some point, unless we have some catastrophic recession where all the money on the sidelines gets to be like, haha, I knew I was right that this market was overvalued. If that doesn't happen, at some point they're going to chase. And when they chase, they're going to have to be chasing the companies that, are performing, and that is the big seven of the world. And if that happens, I think that, there's going to be some momentum still to come in the stock market. UPS just announced 12,000 job cuts. Wow. 12,000 is big. 12,000 is big. Yeah, there you go. UPS 28 minutes ago. Thank you, Martin, for sharing that. And this goes to Tom Lee's point about unemployment, which is that he doesn't want a bad JOLTS report. That's what we're getting today. But it's also kind of a icky, kind of weird space to be in, because a lot of the jobs we got last cycle, either they were cyclical, they were government, or they were holiday jobs. And now we're past the holidays. If you get through that, maybe we actually do see some weakness in the job sector. So UPS fell short of Wall Street revenue estimates Tuesday, reporting drops in shipping volume both internationally and domestically. The company also announced 12,000 layoffs. So their earnings, okay, so 24 billion versus 25 billion. They missed on about 500 million on earnings. They beat on adjusted earnings per share. Net income, they did 1.6 billion. Oh wow. Their net income declined by half. That's why the street, let's see where the stock is. Did the street kill the stock, or did the layoffs save the stock? I think the street still killed the stock. Yeah, they killed it. Down 5.5%. You can't have net income decrease by 50% and lay off 12,000 people and try to save it. There's no way. I'm not saying they're laying off to try to save the stock, even though they might be, but I think, in general, they probably have to reduce their costs. 7.8% decline, 24.9 billion to 27 billion. Revenue is also down about 2.1 billion. Now the people they're laying off, I don't know who they're laying off, but I would imagine they're not the actual workers, because I don't know if robots have replaced them yet. I think they're laying off middle management. I think they're laying off people that are sitting in an office all day telling, the organizing spreadsheets about how the actual people who deliver the packages should be delivering their packages, not the people delivering them. I might be wrong. It might be the actual workers as well. But like, that is what every company seems to, Google in particular, seems to have, aggressively getting rid of, because those people just aren't creating marginal value for the company at the end of the day. Wow. Okay. So we're seeing a ton of cuts there. Someone says here, cut rates and chase returns in equities rather than chilling in money market funds. Yeah. And the weird thing is, when the rates get cut, someone yesterday said, I'm forgetting their name, but they were one of these analysts that I respect, that was like, you would really not want 5 to 6 rate cuts. Anthony Noto. He's the analyst. He was saying on the earnings call, I don't want 5 to 6 rate cuts that quickly, because I think that means that something is breaking in the economy. And that means that our hedges against a recession would end up playing out. They have a bunch of credit swaps as hedges on their loans. But 4 rate cuts in a more procedural fashion, with low unemployment, or unemployment inching towards 4.1% right now, 3.7%, that wouldn't be the worst scenario in the world. That would be bad. We would get a little bit of weakness, but it wouldn't be the worst. And so maybe that is the scenario that we want to play out if we're going to have some bad macro stuff end up happening. I shared a picture yesterday on Friday that, or not on Friday, yesterday night on the market close, that American Express has had their highest credit loss provisions since 2008, which basically means a lot of this whole consumer is strong sentiment. One could interpret that report and say the consumer is strong because they're borrowing, and that's why the consumer is strong, because they have a ton of money to borrow against. I don't know if that's necessarily correct. That's one cherry-picked piece of data, but that is stuff that gets people thinking, well, maybe there's something around the corner that we're not really looking at that can be a bit more intense. And it's something that at least we need to take into account in terms of, how the market's going to react. Let's take a look at equities, and then we'll get into some specific stocks. We'll talk about interest rates, and we'll also get into earnings preview for Microsoft and Google. But let's take a look at how the broader markets are doing. So let's pull this up right here. Okay, cool. So SoFi is down a little bit in the after hours or in the pre-markets. And I think we all kind of expected SoFi would be down a little bit. NVIDIA, 630, 628 right now, it's up. SoFi, as we can see, $8.98. So it's down about 2%. It was up 20% yesterday. Nothing crazy. We'll see how the market reacts. The one fear I had with SoFi, which is why I sold my options yesterday, is because I really don't trust the price action. And I hope I'm wrong this time. And I hope a lot of people make a lot of money and it sustains above $9-10. But it's one of those stocks where the price action has always been a little iffy to me in terms of how it operates. There's a lot of momentum in certain events, and then it kind of just dies out. So we'll see. I mean, the next few days are going to be the days for SoFi to prove that it actually has the momentum to sustain itself. It had 286 million shares traded yesterday. 286 million shares, which is the highest it's ever done in terms of volume, which is fantastic. That means there's a lot of liquidity, a lot of people that are excited for SoFi. My question is, how much of the 20% bump yesterday was of the 286 million in terms of short covering, or how much was it just pure retail momentum and the shorts really didn't care? They were just like, well, it'll eventually go back to normal and we'll just double down. I don't know. We'll see. If I was a short, I would be very scared to short SoFi given the guidance that they gave. But it's also like, hey, if the macro doesn't go that amazing, SoFi is going to be in a tough situation along with the old fintech stocks. So it'll be really interesting to kind of see how this plays out this morning and where it goes from there, and what we see in the context of SoFi. When do we get JOLTS? I believe the JOLTS report is coming out at 10:30. Is it coming out at 10:30? Someone can let me know, but I'm pretty sure it's coming out at 10:30. That's when they usually do it. So we'll see if we're live till then, but most likely at 10:30 we should be getting that number. Okay, so Jin Chuan says, good morning, Mick. Good morning. Thank you for being here. Someone says you are short SoFi. Or are you just saying you are short? Are you saying I'm short? Well, I'm 5'7", so on a good day it's 5'8". But yes, you are right. I am short. But I'm not short SoFi. That's a little bit too scary. I've never shorted a stock, dude. I'm too scared to do that shit. Because there is an infinite loss when it comes to shorting stocks. Like, I don't know. I've got some balls, but I don't got those big balls to do on SoFi. Robinhood went up 5% yesterday with the entire fintech ecosystem. NVIDIA's up. SMCI. Okay, so let's talk a little bit about these guys. These guys are up 10% in the pre-market. SMCI guided for $14 billion in sales, basically revenue. $3.6 billion they did this quarter. And the reason why it's up 10% and why the stock went from $318 on January 1st to $500 on January 30th, and then $550 after hours on January 30th, it's just insane, is because they raised guidance 40% above the preliminary guidance they gave 2 weeks ago that they already raised almost 100%. I mean, it just grew and grew and grew and grew and grew. It just like this company's just not stopping. And so SMCI is a hardware company. They don't have like amazing software margins, but their growth is, it's beginning to replicate software-like companies. I mean, it is software-like company type growth when you got triple-digit year-over-year growth. And so that's why the market gave it a premium. If we look at our semis ETF or our playlist right here, where's the semis? Right here. So most of these companies are green. Marvel's green, ARM's green, Lam Research is green, SMCI, very green. AMD slightly red, but they're just waiting for earnings. AMD also basically doubled in the past 2 months, and NVIDIA at 628 right now in the pre-markets. When SMCI puts a number up like that, the semis are going to do well. And so far, it seems like, in my opinion, 2024 is becoming the year of semis. SMCI was $40 in June 2022. Yeah, it was $70 in February 2023. Chris is someone who told us about the stock, and we all kind of ignored it, at least on the Finance Junkies crew, and I'm sure a bunch of people in the audience, some people grabbed it, but this is something that we just didn't look at. And at the time, it was trading like a 3 PE. It was like a $4 billion market cap. But it was growing like 70% year over year. It was just insane. So this is one of those companies that's now developing a name for itself in the broader ecosystem. Let's look at banks. Banks are all red in the pre-market, not by a lot, but they're ranked. TFC was breaking out yesterday a little bit. TFC at $38.09, starting to gain some momentum. Again, with Fed rate cuts, TFC is going to be one of those companies that does very well. Bank of America is green right now in the pre-markets. And let's look at SaaS companies. Palantir as well. Absolutely amazing breakout. We'll transition to them in just a second. Palantir right now, $17.09. It was up 4.53% yesterday. I know the entire market rallied at the end of the day, but Palantir definitely, had a nice little run towards the end of the day. Probably after the bell, I'll talk about what I want to talk about with Palantir, or maybe just a little bit. But there's a really interesting thing the Palantir community found yesterday on Palantir, and I want to discuss that as well. Microsoft 409, Meta 401. Meta's above $400 now. They have earnings in a couple days. Google 154, Amazon 160. Wow, Amazon's at 160. I didn't even know it ended above 160. Nvidia 624, and then Tesla had a great day at 190 as well. Tesla had a great day at 190 as well. So it's gonna be really interesting to see how Tesla plays out as well, and if it maintains the momentum in the broader green we're seeing versus it shake back down. Chris says, I had 10 call contracts, but I sold way too early. I'd be buying a house with a pool if I still had them. Oh man, it's just insane. The run is on SMCI has been absolutely insane. Just absolutely insane. Okay, let's get a preview on Google and Microsoft this week and get into them and discuss what we want to see from the big boys today that are reporting. By the way, what's the results of the poll? What's the results of the poll that I said? Did you guys say Google or Microsoft on the poll? Let's see. Google. Wow, Google won 56%. All right, I guess we're listening to Google. 289 people voted. All right, seems like Google is the one we are going to. I mean, I own Google, so I want to listen to that one too. So, all right, let's get into this preview.
Google and Microsoft are the first big tech companies expected to report earnings after the bell this evening. Joining us now with what to expect is Barton Crockett, Rosenblatt Securities Senior Analyst. Barton, good morning.
Good morning.
Why don't we start with Microsoft, since everybody seems to sort of pretty much love the story. Seems like you give it a $3 trillion market cap and 33 times PE multiple because you think Microsoft's just going to figure it out. They're in the way of all the big trends that are positive, and they're going to be able to monetize it. What in particular, though, would you be looking for out of this quarter to figure out if they're on track?
Okay. And to be clear, I don't cover Microsoft. We have another analyst who does the software names. But, I think Microsoft is obviously the table setter for cloud computing. And I think the defining kind of player in artificial intelligence. And I think what we're all really kind of curious about is what is the opportunity for anyone to kind of pick up share in cloud-based kind of artificial intelligence computing from Microsoft, which has been really dominant there. And obviously, all of the noise around OpenAI, just very recently, creates a backdrop where if you're ever kind of pick up some share, if you're AWS, if you're Google Cloud, this is when we should see it. So, knock on wood, I think it would be a great backdrop for Alphabet, which reports tonight, if they can accelerate and do, gain a little bit of share relative to Microsoft, which has been tough for everyone to do.
Yeah, now Alphabet, which I know you do cover, do you actually expect that you're going to see net progress there? Because the market's been a little reserved in giving Google credit for being able to exploit all this.
Look, I think that Google's kind of figure it out eventually. I do think they're in a tough place right now where Microsoft has feature set leadership in large language model capabilities. And I think that filters down to people's, usage of the services for cloud computing. So the opportunity is there. I think the capabilities are there. They just need to put it on the field. The fourth quarter, I'm not sure we're going to see it, but I think we'll be looking really closely for some hopeful signs.
What's really interesting to me, so this is my little preview of Microsoft and Google. I agree what he said here about cloud. So, and I'll play a small clip of what I talked to Dan Ives yesterday about this. But the argument that I'm getting from the cloud argument for Microsoft before we even get into Google is that every AI company / startup, whether it's a Fortune 500 enterprise or two kids in the garage trying to build the next big AI thing, which there are a lot of people out there trying to do that, they need compute and they need cloud credits and they need the infrastructure that Azure or a GCP or an AWS provides in order for them to execute what they need to do. And Microsoft's at the center of that. And Microsoft's AI cloud is one of the best ones, given some of the numbers that we've seen. Microsoft is expected to grow 15.8% next year, or this quarter, which is better than the past 2 years of growth, right? They were always stuck between 7 and 8%. Now they're at 15%. And for good reason. When you get to become a $1 trillion company, it's hard to grow, double digits every single quarter and every single year. Guidance they give for 2024 might end up being very, very exciting if they suspect more cloud growth and if they suspect more Copilot growth and if they just have other AI elements of growth that's coming in, right? So even if, Office is not growing as much as it used to, or their gaming is not as big as it is because they're trying to figure out how the Activision Blizzard situation gets sorted out, as long as AI cloud and AI-based software services grows, that's kind of all they need. And from the preliminary numbers we've seen on Copilot and the number of people that will subscribe to it and actually use it, it seems like Microsoft's very excited about this. Here's me and Dan Ives for about 2 minutes yesterday talking about Microsoft, discussing it. Someone said I looked like I just came off a boat in Colombia and I'm selling a lot of blow. I don't know what that means, but nonetheless, I dressed up for the occasion. So here's what we have to say about Microsoft.
Do you think this valuation is, do you think the numbers they're going to show off tomorrow, do you think Nadella is going to justify a $3
Look, the
trillion
reason right now the statue, they're carving it in Redmond for Nadella, and they're trying to figure out where to put that statue. Because he, along with the godfather of AI, Jensen, I mean, they're leading the AI revolution. And when you look at Microsoft, the numbers in terms of like Azure growth and top line, the most important is really like, what do Copilot conversions look like? What is the acceleration toward AI from customers? Is cloud growth accelerating relative to expectations? The reason that's so important is because I could argue Microsoft, 55% of its cloud, like next few years, 70, 80%. No one cares about PC game. It's just like headlines will come out and someone be like, oh, you know, like beat or all people, the street is laser focused on cloud, Azure growth, and what conversions are going in Copilot. Because that's really the story. And I think this is a $4 trillion market.
No, you've been very excited about Microsoft. Speaking of the cloud, I think that's going to be the thing I look to the most. Is you're traveling around the world. You're talking to all these executives and CIOs around use cases. As you're speaking to them about use cases, I'm assuming you're getting excited for the things they want to do. But everything they want to do comes down to paying AWS, GCP, or Azure to be able to do that stuff. Is that your real bull case for
that's
Microsoft?
the whole thesis is like, for every $100 of cloud spend, there's an incremental 35 to 40 of AI driven spend that Microsoft's going to get. So it goes back to like what you're looking at in terms of the model. I mean, this is going to be a drastically different company in a few years.
So that is why Dan Ives is excited about Microsoft. I'll put the link in the chat if you guys want to watch the whole thing later. But I mean, I think it makes sense. My problem is Microsoft is up a lot, dude. Like just on pure, if you're just looking at the damn stock, it's up a lot. I mean, let's go to Microsoft right now. So Microsoft's at 412. It's up another % in the pre-market. Let's just go to the 6 months on Microsoft. Microsoft was $308 in September. Microsoft is $409. Okay, so let's do some quick maths. It's 412. We'll use the pre-market chart. 412 minus 308 divided by 308. It's up 34% in the past 3 months. Already, year to date, Microsoft was up in 2023 about 60%. So you're talking about another incremental 20%. And Microsoft is not NVIDIA. They are not growing at triple digits year over year. And they're not showing the guidance that would suggest that they get that type of a premium. So the only fear I have is that if they come out not flat, but just like a little less than what the street expected, does it go down, 5-6%, maybe 10%, real pullback? Because the street's like, well, these numbers just aren't as real. And does that create a cascading effect throughout the entire economy in terms of AI not being a thing? I don't think that happens. Even if Microsoft doesn't go up today, I don't think they necessarily go down, because I think the street realizes there is a lot more to the story, and you got to give them time to develop. But if I was Satya Nadella, I would really be working with my team to make sure that cloud is real, the growth on guidance is real, and we can give as much assurance as possible on this call that Microsoft's going to work. And then after Microsoft, we got Google. Same thing with Google. Big thing for them. Their search business grew about 11% year over year. Last quarter, $44 billion in ads. They're expected to do $85 billion in ads in general across the board. Cloud, they missed by about 200 million last quarter, and that's what really got the street upset. They tanked them down to $122. This was on Halloween. I would imagine that Google fixed that cloud thing. They did whatever the hell they have to do to make sure that cloud growth did well. Q4 is an advertising quarter for holidays, so I imagine Q4 did very well for ads. ChatGPT is not really taking away market share from Google. So as long as Google presents a nice outlook and they say AI is also helping them grow as well, along with Gemini, which is their version of GPT, continuing to maintain momentum and eventually compete with GPT for developers and their API access, I don't think Google's going to crap the bed. I think Google's going to do well as well. So it'll be really interesting to see how Google and Microsoft end up playing out. SoFi is down 3.28% in the pre-market. SoFi is down 8.86 at $8.86. Robinhood's down about 0.22% in the pre-market. SoFi is taking a little bit more of a beating, down about 3%. We'll see what happens when the market opens. Maybe this is just people taking some profits and there's a lot of buy orders coming in. We'll see what happens. But right now, SoFi is down about 3%. Chris says, don't forget it's election year amid. Google's going to make bank on election ad spends. Yeah, I mean, that's another thing. Even though we kind of know it's Trump versus Biden, I think it's become pretty obvious now. Trump versus Biden is going to have a lot of advertising for it. I mean, we already saw the Biden campaign start some advertising. They're starting to sell some shirts on their website and stuff. So that's happening. There's also races between municipalities and different towns and different governors. So you're going to have that from an advertising perspective, even if it's not just the big guys advertising. So there's a lot of ad money coming to Google and Facebook in 2024. It's an election year, and you got the Fed potentially cutting rates by the end of the year. You could imagine that it's going to be an exciting year for the broader ecosystem that is advertising, particularly based on the fact that, you know, we're having an election. So that's just another bull case that again comes down to Google and Microsoft. So it's gonna be very, very interesting to see what happens. Speaking of elections, real quick, I want to play this quick clip I did from my Meet Kevin interview. This is from when I was talking about him more about his life, not just about stocks. Here are his thoughts on what happens with the election. And what he says about the economy, I think at the end of this clip is actually really important and goes into why this year is so important for companies like Google and Microsoft.
Do you think Biden will be the nominee?
Yeah.
Do you think it will be Biden versus Trump?
Yeah.
Do you think Trump will win the election?
It depends on the economy. It will only depend on the economy. So if we are in a recession with 5+% unemployment and rates are still high, Trump's in,
Right.
like guaranteed. Like
Right.
if the election was held in October when the stock market had fallen for 3 months and, inflation's still a battle and rates are still 7% on a car or house or whatever, Trump wins instantly. If we get to November and we're at, 2.5% Fed rates again,
Yeah.
which we could be, with some convenient emergency cuts right before the election, probably will happen. Not necessarily because of political jade, but honestly, I think we're about to walk into a jobless recession. And the Fed will do everything in their power to print their way out of that. That will be very convenient timing for Biden. And when that money printer turns on, and if they could stop the joblessness, then people have jobs, home values didn't collapse, rates are coming down, stock market up, bonds back to normal levels, which means yields down, bond values up. People look at their portfolio and go, shit, do I want to mess this up?
Right.
I think he's making a good point here. I definitely think he's making a good point in the context of, how good the economy is or how bad it is. I kind of personally thought that if it was Biden versus Trump, I do personally feel that Trump is going to win, just given, the nature of Biden and his inability to really communicate as well. But he brings a good point up, which is that somehow if the economy is doing really good in October, S&P's at 5,200, you got Jay Powell cutting rates. It's more affordable now to buy a Tesla if you want. I mean, there is an argument of just like, hey, do I want to mess this up? Do I want to create a lot of instability in the market? Do I want to, do something that would maybe change the way the market's going? So that is something I think to at least think about when it comes to the election and where the market's going from there. Stevie Stone says, how much profit did you make on your SoFi call options? I made $1,200. What's so interesting about those SoFi call options? So I bought them at 70 cents a contract, sold them at 90 cents a contract. So I made 30%. If I had waited probably 40 more minutes, I could have sold them at $1. So I would have made another $800. If I had waited an hour and 30 minutes when SoFi went to 870 yesterday, because it had a little dip, I might have panic sold them and only made $500 because I would have got them at like 85 cents or 80 cents a contract. So this is why yesterday when I was saying I was happy they got filled, they were 2026. I didn't know how much liquidity existed there. And they got filled pretty quickly at a 30% gain, which is not bad. Could it have been 40, 50%? Yeah. Could it also have been 10, 15%? Yes. Because, when the thing's falling from 940 to 870, you're kind of like, all right, we're going back down to 820. At least let me make some profit. And I'm not, that's just how that's human nature. You sell versus, I got it at least a little bit of a gain. So it's really hard when you're trying to time these options. You got to have a decent exit strategy, some goal in mind. And then you got to get out and take your profits where you can get them because you just never know what can happen. You just never know what can happen here. Nvidia at all-time high in pre-markets again. Yeah, Nvidia is at all-time high in the pre-markets again. I mean, this is just insane. This is just absolutely insane, some of the momentum we're seeing on Nvidia. We got 4 minutes till the market open. Let's get a quick update on GM earnings and see how they did. They did pretty well. They're up 7% right now. Get an update on that, and then we'll get into the morning bell.
General Motors reporting quarterly results. Let's get to Phil LeBeau with the numbers. Morning, Phil.
Good morning, Mike. This is a beat on the top and the bottom line in the fourth quarter for General Motors, earning $1.24 a share. The street was expecting $1.16. Revenue well above expectations, coming in at $42.98 billion. The street expecting $38.67 billion. Remember, in the fourth quarter, you had the UAW strike and a number of adjustments the companies made after it. So keep that in mind as we go through the fourth quarter numbers. Free cash flow, $1.3 billion versus the estimate of versus $4.4 billion a year before that. EBIT adjusted income, $1.75 billion versus $3.79 billion the previous year. The EBIT adjusted margin, 4.1%, down from 8.8% in the fourth quarter of 2022. North American EBIT adjusted margin of 5.7% versus 10.3% in the fourth quarter of 22. One important note regarding China, the company's China equity income in the fourth quarter, $93 million. And we'll talk about China and what GM is expecting in the first quarter as part of its guidance here. For 2024, the company's EPS guidance of $8.50 to $9.50 is well above what the street's at. The street's at $7.87 right now, with EBIT adjusted income expected to be $12 to $14 billion this year. Free cash flow for the auto division, $8 to $10 billion. The company is still saying that it expects to be EV profitable in the second half of this year.
That's interesting. So they're still thinking their EVs are going to do well.
That's an important benchmark they're putting out there. Also, they are expecting a loss in the first quarter from their operations in China. That speaks to growing inventory and a market that is slowing down overall. Bottom line is this, guys. They are expecting lower pricing and pricing headwinds and higher costs, but General Motors in the fourth quarter beating the street on the top and the bottom line. Don't forget, we're going to be talking with GM CEO Mary Barra coming up on Squawk on the Street. We'll talk about.
Wow, interesting. So they're still expecting a loss. They're expecting EVs to eventually become profitable, and they believe that China is becoming a much more competitive market for them. So they're expecting a loss in China. I mean, it speaks to what Elon said about China, that it's becoming more competitive as well. If Tesla can't win in China, I don't know if GM's winning in China. SoFi right now down about 1.47%. It's above $9 again. Spotify is up 1% right now in the pre-markets. Not sure if any news came about them, but they are up right now. Nvidia 629. SMCI again, $26 billion market cap, guided for $14 billion in revenue, as Harry says in the chat. So that's why you've got SMCI just moving. Absolutely insane. But we'll see what ends up happening as the market opens in about 45 seconds. This is going to be an exciting one because we had a very green day yesterday. Curious to see if the green can continue and how much the green continues. You had Enphase yesterday that was up about 3.6%. Verizon down a little bit in the pre-markets. Big tech controls everything today. Big tech controls everything. And if we have a crappy earnings from big tech, it's going to be a tough day. Matt says absolutely zero chance of them being EV profitable this year. Well, they guided for it. So I guess we'll see in the next 6 months if they end up getting there. All right, folks, here we go. S&P is at all-time highs, 491. Tuesday, January 30th, 9:30 a.m. Thank you all for spending your morning with me. It means the absolute world to me. The stock market is now open. Wake your ass up. Here we go. Let's get into it. S&P opens up slightly red, 490.65. Not bad at all. SoFi opens up green from the pre-markets, even though red from yesterday, $9.12. So that little dip below $9 didn't last for too long. We'll see what happens. But right now, $9.10. SMCI, amazing guidance, growing 103% year over year. They are up 10% on the day, $540. I see a lot of sell orders coming in on the time and sales portion of this Webull chart. So there is, it's down about 2% now. So we're seeing some profits being taken, but still up 8% on the day, 537. Not bad at all for SMCI. GM is up 8.45%. Spotify's up 1.5%. Bitcoin's had a hell of a week. Bitcoin bounced, look at that, from 39,527 on January 25th to 43,857. Bitcoin has come back
just a little bit, and now we are seeing some momentum there. Some updates on BlackRock's ETF is that they hold, I think now, about like $4 billion worth of Bitcoin, like legitimate Bitcoin after the past 2 weeks of buying it. So we've got some more Bitcoin momentum going there. We've got Google at 154. We've got QQQs at 427, S&P at 490, Robinhood at 1121. That's down about 1% on the day. Nvidia 628, Microsoft 411, Snowflake 208, Palantir 1702, falling just below, just to that $17 level. Down about 0.5% on the day. Verizon 41.97, Google 154, Meta continuing momentum now above $404. This is one of those stocks where it's like, at 250, it felt like, all right, it ran up from 88, it did a 3x, it'll chill. Then it went to 300, it's like, all right, it'll chill. Then it went to 350, it's like, okay, there's no way. Then it's at 400, and it's just, and I think they're going to crush earnings. Meta's going to crush earnings. They're going to show ad growth is not going anywhere, and Meta's probably going to keep doing better. So congrats to Meta shareholders if you own this. PayPal 63.36. At least we're above that $60 range. We got some momentum from SoFi yesterday, as all of fintech tended to do well. So now PayPal, is got a little momentum as well. Visa 275, American Express down just a little bit. Celsius continuing to be in the gutter, 51.74. Celsius Energy not getting any love by the street yet. They're part of our Peter Lynch Plays playlist. What do we have here? We have Ulta, Wingstop, Kava, Elf, Bros, and Celsius. Elf, all of these are red except Wingstop. Wingstop's a little bit green today. The rest of these guys are down. Celsius right now down at 51.82. I think they have earnings in like a couple of weeks. I could be wrong on that. Let me know in the chat, but they do have earnings coming up soon. CrowdStrike is up today, $300. Oh, look at that. We're at 300 on CrowdStrike. When's the last time we had 300 on CrowdStrike? Yeah, last time we had 300 on CrowdStrike was November 2021. That's a new all-time high. Wow. I mean, and it didn't even get there. It got to 298 back in 2021. So that's a new all-time high. CrowdStrike got to 307. Now it's at $300. Not bad at all for CrowdStrike. Mongo's up. Atlassian is up. Salesforce is up. By the way, speaking of Salesforce, you guys know that Salesforce owns Slack, right? There was a guy yesterday who was transitioning his entire company's messages, about 10 million messages from Slack to Microsoft Teams. I don't know why he was doing it. I guess he got bored of Slack or whatever, and he got tired of it, so they moved it on. Slack quoted him $78,000 to transition his team's repository of messages from Slack to Teams. And this guy has 300,000 followers. He's like in the Silicon Valley community. So he tweeted about it. Mark Benioff, the CEO of Salesforce, personally reached out to him, gave him his phone number, and said, we'll make sure, things are okay. And that's great for that guy who has 300,000 followers and is able to tweet about this stuff. But for the average person that doesn't have that many followers and doesn't have that influence, I mean, that's a tough gig, dude. If Slack's charging you that much money, I mean, to me, it shows Slack's kind of desperate to keep people if they're charging that much money. By the way, Tesla 194 up 1.6% on the day, just to be able to transition your messages, which I don't know if it's not a bear case for Salesforce by any sense of the imagination, but it's definitely not a good look on Slack if you're having to charge people just to transfer your messages. That's a tough thing to be able to do. Chris, you said Amit, check this out. But I don't see your link, Chris. Or unless you send it, you could text it to me and I'll open it up. I don't see the link in the chat for what you wanted to show me. So that's what we got on Salesforce. Tesla's at 194, S&P 491, SoFi 909. So still maintaining above the $9 range, which is not bad at all for SoFi. Meta 402, Coinbase, look at that 134. Let's go to the crypto boys. Crypto's green. There you go. Robinhood's the only one that's red here, and Hut 8 Mining is red. CleanSpark's up about 1%. Coinbase is up 1.6%. Bitcoin's up. Ethereum's up. Marathon's up. Riot is up. MicroStrategy up 1.97%. MicroStrategy had a nice dip to 450-ish, 470-ish. So, or 480. Now MicroStrategy is at 523. Cypher is up about 0.32% as well. And Bitfarms up 1.67%. So a little bit more Bitcoin momentum starting to come in to the marketplace. AI stocks, we got C3 AI down about 1%. Palantir's green. Datadog, Oracle, Snowflake, all of these guys are red as well. And then fintech, Affirm is down, PayPal's down, Square is up, Coin is up, Robinhood's down, and SoFi's down. So fintech, we got 2 out of 6 that ended up green so far for the day. Amit's gonna buy a Tesla this year. I'm calling it, dude. I'm not, but I'm very happy with my Honda Civic. I have $2,000 less than two. I have like $1,800 left, and then it's mine forever. It's I don't owe any payments to Honda anymore. I could have paid it off a while ago, but it's a low interest rate of $300 a month, and I'm like, that's pretty reasonable for it. Like, that's not too bad.
So I'll be very happy to just own that car forever. But I did get an oil change yesterday, which makes me realize, like, yo, Teslas would be pretty nice, not have to worry about an oil change. But probably not buying a Tesla anytime soon. Okay, so this is what Chris showed me. U.S. asking rents fell in January for the 6th month in a row and are now down 1% over the last year. This is a nice chart because it's confirming some of the biases we've had on the stream as we've been talking about inflation coming down, that shelter in particular is lagging. And what was one of the biggest reasons why inflation was hot, CPI was hot in January? Or in December? Because of shelter and rents and inventory and supply. And we know housing inventory is going up. That should decrease overall. That should decrease the price of a lot of these houses, which as we have increased demand, which for the 3rd consecutive row last week, we had more mortgage applications. So that was really good. 2023 was the lowest year on record of selling houses because we had mortgage rates at 8%. That has come down to about 6.84%. So all of this, along with rents coming down, that's a really, really, really bullish sign for the broader shelter inflation coming down, which should help CPI. And if you look at something like Truflation, where now inflation has got to the lowest percent that it has gotten since Truflation has began tracking the U.S. inflation rate, we're at 1.76%. I think part of that is because of the picture Chris just showed, which is that shelter rents, asking rents, inventories for apartments, those are going up, rents are coming down, and we're seeing that affect real-time inflation. So again, this is, some people, I saw some bears on CNBC saying yesterday, the reason the market's going up is because consumers are just borrowing money and it's not because of inflation coming down. I don't know if they're right about that. I think the reason the market's going up is because the market realizes the Fed will have to cut rates because it's not sustainable to have 5.5 rates when inflation's at 1.76%. That may be the reason why the market's actually going up, or at least why the market's getting, a bigger premium than what a lot of people expected. SoFi, $9.24. SoFi doing a really good job today maintaining that momentum. Very, very good job today maintaining that momentum. $9.20 right now. Where's TFC? TFC is, oh, wow. Look at that. TFC 38.13. TFC 38.13. Not bad. Not bad at all. So we're seeing some momentum there on TFC. TFC has been stuck in that 36-37 range. So if we can break out to 39 and eventually just hold 40, that would be really exciting. Their earnings went very well. We talked about them last week. January 18th, they had earnings, but I mean, look, they said they're doing their cost cutting. They're getting their stuff in order. They're raising their ratios. They're doing everything they need to do to make sure they're a stable bank. And so TFC is seeing a little bit of momentum here now as well. Let me talk a little bit about Palantir. It's a very interesting thing we saw from Palantir yesterday. Arnie found this yesterday that I thought was incredibly interesting. So Wall Street Journal basically said that Palantir's government business is struggling, and we should be very scared of companies like Booz Allen Hamilton that are going to be taking Palantir's lunch in the government space. By the way, that name always gets me because it's Booz. I'm like, oh, is Alan Hamilton drunk today? Like, that name is, I can never work at a company and be serious. Like, well, I'm going to work to get drunk with booze today but like, I can't take that seriously. Okay. So here's what Arnie found yesterday about a DoD platform called Advana. Okay. Advana is something we talked about if you've been following my channel since the OG days. This is a large scale analytics platform that has been perceived as a threat to Palantir for military applications. It is used in the DoD, but it's not used at the level of the battlefield. And so I think in 2022, we were talking about, what if Advana becomes a threat to Palantir, along with the fact that Cathie Wood potentially sold Palantir because she saw some of these platforms that were cheaper that could replace Palantir. That was back in February 2022. Here are some quotes from what the DoD report came out with yesterday. With regards to Advana, we heard concern that large centralized platforms often create more silos and blockers than they removed. It left customers with a sense that they cannot meaningfully engage with Advana and has furthered the perception that data is for business analytics and not for the warfighter. The platform is a helpful tool for data literate people, but not for the general or battlefield use. Basically saying it's for the elites. It's not really for people that need to use the platform. Specific criticism of Advana highlights problems with redundant and overlapping capabilities, dissatisfaction with the platform's limited ability to write software to complete non-trivial transformations on data, and missing basic functionality. This, to me, if you're a Palantir shareholder, is something you want to take very seriously, because on one hand, we're hearing that the government is in a massive, it has a lot of massive headwinds in regards to open source software that's cheaper taking Palantir's lunch. On the other hand, you're hearing what the DoD, the guys who are going to be buying either Palantir software or, getting drunk off Booz Allen software, saying, wait a second, this shit doesn't work. And if it doesn't work at the end of the day, you just can't waste the taxpayer dollars spending money on this stuff or worse, harm someone on the battlefield's life because of this stuff. So I think this is really good, just due diligence in terms of understanding that Palantir definitely has a moat. Their software is very important in the government space, and I don't think that's going anywhere. And so this is going to be why it's exciting to see where Palantir ends up going over the next couple of days. And we got earnings on February 5th. We'll be live on this channel after hours, earnings on February 5th, to discuss what's going on in the world of Palantir. Let's get an update on rate cuts. So we were talking about rate cuts. We were discussing what's going to happen with rates. Here's Mohamed El-Erian. He's one of the best analysts on CNBC, in my opinion, discussing where he thinks rates are going and how quick the Fed is going to be to cut these rates.
Again, Mohamed El-Erian, Chief Economic Advisor at Allianz and President of Queens College at Cambridge University. Mohamed, I know you heard we were talking about there. I'd love, though, your take, bigger picture. I mean, as the Federal Reserve officials get together today, they have to be feeling pretty good in general. I mean, the economy's holding up better than they had anticipated. Inflation has come down even a bit faster than they projected. And even if we're talking about when they might start rate cuts, it's in the guise of normalization and it's not an emergency. So how are you thinking about their job this week?
So you're absolutely right. They're going to welcome the reduction in inflation. They're going to take a lot of comfort from the fact that it didn't come at the cost of growth. The U.S. economy has been exceptional, and the Eurozone data today reminded us of this U.S. exceptionalism. They're also going to say that their job is not done, and they're going to maintain optionality. And most importantly, I think they are not going to validate the notion that rates are coming down in March. They're going to keep their options wide open. That's where they're going to end up. That's the committee. What's interesting is what the chair is going to do during the press conference, because we've seen in the past, the chair does sometimes diverge from the committee. So it'd be really important to listen very carefully to what the chair says.
For sure, Mohamed. Although I do think that the market, I mean, to the degree to which we want to, make something out of this perceived gap between how the market is positioned about rate cuts and what the Fed has been saying. I mean, if you just stack up all the things we know about how the Fed has said it will respond, you have a 5 3/8 Fed funds rate right now. Inflation is way below that. They've talked about how that represents a restrictive policy, even if we're not really seeing it in the economy. We've had this 6-month average. A lot of people are seizing on of core inflation being very close to target. And so all those things put together, and, Powell has said, yeah, of course, we're going to be cutting before we get to target. So I guess the question is just exactly how much work do you think he'll even try to do to talk the market in a different direction?
It's hard to tell. Predicting him even within the same press conference is tricky. So it's hard to tell. But you're absolutely right. They have the scope to cut rates. I don't think it's going to be as aggressive as the market thinks. Exactly where the consensus is in the survey that Steve shared with us. Why is that important? Yes, we all end up at the same destination in 2025. But remember, we've become a single issue market. Our focus on the Fed and our focus on the Fed loosening liquidity conditions has allowed us to sideline all sorts of other issues, including geopolitical risk. So where this comes in is can we continue to rely on our focus solely on the Fed to sideline all these other issues that are mounting on the sideline?
That's a really good point that Mohamed brings up right there, because, I mean, he's kind of correct in that. We have been basically saying the Fed is the arbiter of everything good or bad that's going to happen in society, because obviously they determine the state of the economy, and the economy is the underlying foundation for how we think of, I guess I would argue, humanity. Money really runs the world, and we need a society to operate in a meaningful way. So we need a good economy. But there's a lot of geopolitical stuff that's happening across the world that we've kind of ignored. Not that it's not having an impact on the economy. Obviously, what's going on in the Red Sea has had a massive impact on supply chains. It's shut Tesla's Germany factory down for a month until February 12th. But it's all dominated by coverage around the Fed and what JPOW is going to be able to do. So at some level, it'll be really curious to see when the Fed doesn't have that big of an impact. And maybe that's when inflation finally comes down and we get some meaningful rate cuts. But as of now, the Fed determines everything. And their decision-making also determines how people think or even conceptualize where this economy is going to go and, how it it's going to become better or worse for everybody else. So it's going to be really interesting to see what the Fed does tomorrow. I'll be live streaming the FOMC meeting. That'll be a big meeting. And you know what's funny about this? In December, no one expected Jay Powell to do the Powell pivot. I mean, it was a hell of a pivot. We saw the market. I think the S&P went from like 445 to 456 in a day or in 2 days. We saw massive, gains in Enphase and Tesla, just all these companies that were so interest rate sensitive. They went up because Powell pivoted. Do we get something like that tomorrow where Powell says, we're going to get a March cut? Right now, Mohammed just said the Fed's not going to say we're getting a March cut. The one place I would disagree with him here, potentially, is that bank lending program that the Fed put out in 2022, that's ending in March of 2023. And one of the reasons it's ending in March of 2023, you could argue, which just means that regional banks are going to have to pay higher rates, is that maybe the Fed is cutting rates, so regional banks won't have to pay those rates. So that means they won't have to get any money from the Fed. That could be the one reason for why the Fed actually does lower rates in March, because they're ending that bank term funding program, the BTFP that they had since last year. But I think that is a little bit of a stretch. Maybe that's, maybe they're going to cut it a couple months after, and they're going to let the regional banks deal with some issues for a month without worrying about what happens. So we'll see what happens, but it'll be a very, very interesting tomorrow when it comes to the Fed. We have Pfizer earnings. Let's look at that real quick. Pfizer reported earnings today. Revenue $14.25 billion. Earnings per share 10 cents adjusted versus a loss of 22 cents expected. I think the stock should be up. Pfizer, stock's up. I mean, barely, but stock's up. So Pfizer's a really interesting company because it was at decade-long lows, and I didn't end up buying it, but I did, look at the stock just given all the cash they have. Stock's up 0.15%, so it's still stuck. It's really not moving at all. So nothing the reason for that is because there's no catalyst in their earnings to be able to imagine there's going to be massive drug sales or anything that real over the next years. So that's why we got Pfizer down right now. But Pfizer is there, 27.45. SMCI 508. So SMCI got sold off. It went from 550 to 509. Makes sense. People took some profits. But right now, SMCI also is one of the most heavily shorted stocks on Wall Street, by the way. One of the most heavily shorted stocks. And so I didn't think there would be a short squeeze, but I mean, definitely because people were just going to take profits. But there's kind of been, I guess, a little bit of a squeeze over the past couple of weeks, given the run from 300 to 500. But you do see people taking some profits now at $550. Truist 38.12, GM 38.36, Spotify 221, Bitcoin 43,000, Robinhood falling about 1% today to $11.16, Nvidia 626, Palantir 1707, CleanSpark 876, Enphase. Oh wow, Enphase is up 110, up about 1%. Tesla, it's not falling to the 160s yet. It's at 193. There are buyers of the dip on Tesla that are ready to give their hard-earned cash to Mr. Elon Musk to support his company. At least so far, it's not down. It's not down yet. Adam says Macro Jackson moon talking. Dude, someone called me Macro Jackson yesterday, and I really love that name. Like, I love that name so much. I want to change my Twitter name to Macro Jackson. That's just so cool. Imagine my bio, Macro Jackson, and I moon talk. Like, that's dope, bro. That's cool. I like it. I feel like we should name the channel Macro Jackson. That's just cool. I like it. It's so dope. It was me. Oh, Adam, it was you. Okay, so thank you. It was you. Thank you, Adam. I appreciate it. That's so dope. Jolts is at 7 a.m. Okay, so we'll get that in 11 minutes. Okay, cool. So we'll be here for 11 minutes. We'll get Jolts at 10 a.m. and we'll see what Jolts comes out to. Google at 154, Meta 405, Uber 6. Oh wow, Uber. Look at that. Uber all-time high. 67 Dolores on Uber. Lululemon is at 48, 485. Celsius still stuck. 51.73. Celsius still down there. I think their next quarter earnings are going to surprise people with all the growth. I'm just concerned on how much the market is going to give them a premium on Celsius. Steve and I on Valuation Nation, we'll talk about Starbucks this week. We couldn't do it over the weekend, but Starbucks, we'll be discussing this one. He's excited for this. He sent me a very interesting picture yesterday of what he drinks, and we're gonna confront him on the call, on the podcast, on the type of drinks he gets from Starbucks, because I need to confront him and say what he has to say. Kelly says, I'm very disappointed in your discouragement from buying Tesla at 185 to 180 now. Yes, you got to give me all the blame for you not buying Tesla at 180 now that Tesla's 193. Look, the thing about Tesla, I was talking about it with someone yesterday. And just, I was talking about it with someone. I was talking about it with Dan Ives yesterday. And I asked him, well, what happens if Tesla gets up to like 200 and the retail momentum kind of carries it? How do you think? And he was basically saying, he had some analogy that I can't remember, but it was a really funny analogy. And he was basically just like, look, in the short term, this company's dead money. This is not a company that you can easily bet on. And sure, it might go back up to like 220, 230 because retail wants to carry it, but there is not a fundamental reason. I mean, I even think he said verbatim, it's overvalued right now because we don't have guidance on growth. We don't have guidance on margins, and there's no headwind, or there's no tailwinds. There's only headwinds. The only tailwind is for the bot and FSD. And those are sort of imaginary because until they're real, the bot is not real. And FSD, for all intended purposes, is simply not real. And even if it does become real, for it to be operationalized throughout the entire economy and to get through regulatory hurdles and all that, like it's still fake right now. The only thing that's real is energy, services from Supercharger Network, and the automotive business. And all of them are facing headwinds. If you looked at their solar growth in the earnings slide, I mean, their solar growth was just horrible. It was like end phase level growth. It was so bad. And the reason it was anemic is because, well, interest rates are high right now. Interest rates are high. So hard to disagree. They're both real. No, I agree they're real. But in the context of an investment thesis right now, you can't be buying Tesla based on the bot or based on FSD, in my opinion. You're buying it because the automotive business is going to continue to grow. And the problem with that is that, management did not really explain how the automotive business is going to continue to grow. Now, granted, it's going to do well. The question is it going to do well enough to hit that 50% growth target? And that's the big thing Dan Ives was saying is like the numbers don't lie. If you're not growing 50% year over year, you cannot justify some of the multiples you're getting on Tesla. Now, if you want to say, well, the bot justifies the multiple, my question is, where the hell is the bot? If it's not operationalized, and if they're definitely not going to be making any money off of it, and Elon said that himself in 2024, maybe 2025, they ship a couple units, then that's just a pipe dream if you're imagining the bot. Like it's just really, it's just silly at this point, So yeah, Tesla at 193. Vitaly, our good friend from Finance Junkies yesterday, we did a whole segment on Tesla. He sold Tesla. He sold it at 180. He sold a decent chunk of it because he was 30% exposed to it on his portfolio. And the reason he sold it is because he also sees the writing on the wall, which is look, this is not a company that necessarily has the tailwinds ahead of it in regards to the automotive business. Now, granted, all of that might not matter when Tesla goes up to 220 because people just buy the dip. Sure, that could happen. But we've got the numbers. We're not struggling to find the numbers. The numbers are here. And you probably, it probably does not deserve to be at an extreme multiple, just given the growth rate. And so given that's the case, we'll see where Tesla goes. But if you want to dip your toes in it, I don't think 193 is horrible. And if you have to buy it at 205 versus 193, it's not that big of a deal. But if you could get it at 160 because there's a lot more pain coming, that's not horrible at all as well. Vitaly at 35% Tesla. I don't blame him. Yeah, I don't blame him either. But Tesla's for generational holders, not short to medium holders. I agree, but this is what Dan Ives was also saying yesterday. He was calling out a lot of retail investors actually that are just like, oh, I'm long term. He was basically saying you guys are fucking stupid. And I think he's right to an extent. And I'm the same. I'm one of the guys he's calling stupid. Okay, so I'm in the same boat, which is that you can't just always say you're long term and buy the dip and then be bag holding. Like there is a massive opportunity cost to your capital here. And so price of entry matters, valuation matters. You're not trying to time the market, but if you had to buy 10,000 shares of Tesla and you bought them all at 220, you're holding that for a while until it rebounds, right? Versus if you were strategic and you bought 1,000 at 220 and then 1,000 at 205 and then 1,000 at 180, right? And really DCA'd properly or just gave yourself some more patience. So I think there is an argument for, you can't just say it's about for the long term. It's hard to do that. But I hope Palantir breaks 20 before earnings. I don't think it'll happen before earnings, but I think on earnings. Okay, so here's a tweet I want to show you guys that relates to Palantir and AI growth. This is from an awesome account. She runs a fund. She runs the IO fund. Her name is Beth Kinding. I just subscribed to a newsletter. It's just really, really good stats and data. But here's what she said yesterday. OpenAI CEO Sam Altman is reportedly looking to raise at least $8 billion to $10 billion to help build chip factories, AI chip factories, as he believes TSMC, Samsung Foundry and Intel Foundry Services will be unable to meet AI chip demand in the coming years. Now, there's a couple of things, and I'll get to how it relates to Palantir in a second. SoFi up 2% as well. So Sam Altman is trying to build a chip factory in the United States. I don't think he's trying to build a chip factory just for the hell of it, just because he's bored, just because he likes, Lay's and Doritos. I think he's trying to build an AI chip factory because he realizes he's seeing as the CEO of OpenAI that this demand is real and this demand is about to get insane. And that you shouldn't just be reliant on NVIDIA, AMD, and TSM and Intel in order to be able to do the procurement
for the hardware, GPUs and CPUs, and then ultimately software, the SMCIs, et cetera, that create the hardware that the chips go into. He doesn't want to be reliant on these companies. What if OpenAI could own the vertical stack? On top of that, what if this was a subsidiary of OpenAI? What if OpenAI became a chip company, not just a chat GPT like API company? That would be exciting. And that, someone commented under my post yesterday, would heavily boost up the valuation of OpenAI. So Alpha Extremist says he is pumping his valuation, vested interest, hence under investigation by the USG. I don't know, what that investigation would look like, but one could argue that Sam Altman is like, you know what? 86 billion for ChatGPT is just not enough. We're probably not selling to the enterprise. Like, this is actually really interesting. ChatGPT is not selling to the enterprise as much as something like Palantir or some of these other services. I mean, maybe they are. We'll see the numbers in the future, but I think Palantir is going to have a better success in the enterprise. The enterprise is where the money's in. So then you've got ChatGPT. ChatGPT is $20 a month. I pay $20 a month, but there's not that many people that are going to pay $20 a month. They don't have any ads, so they can't monetize the billions of page visits they get every day like Google. So, okay, so enterprise, no real money. Consumer, no real money. So then where's the real money? API calls from developers, that amounted to about $500 million worth of revenue from the last numbers I looked at last year in 2023. The company's valuation is at $86 billion. You cannot be trading at 86 times revenue. They got another $500 million from enterprise. So now you got $1 billion of revenue. You can't be trading at 86 times revenue. Like it just doesn't make sense. Especially for an AI play. Like, yeah, you'll get a premium, but you can't get that big of a premium. So how do you justify the valuation? Well, what if you say to SoftBank and to some of the bigger VC firms of the world, hey, we're a chip company. We're not just an AI company, especially when your core AI is commoditized. The GPT, you can use anything and get some of the same results as GPT. Maybe GPT is better, but there's so many models that are coming out that are open sourced that OpenAI's closed source model eventually won't be able to compete with because they're just going to have more developers plugging into that open source ecosystem. That's where I think Sam is in a peculiar position where he has to figure out how the hell to make sure his company is actually worth what it needs to be worth. And so what does that relate in the context of Palantir? Well, if demand is truly this high, if it's not just Sam Altman trying to pump his valuation, if he really thinks we need to have billions of dollars of venture investment into a United States chip company, then maybe Palantir is going to have a lot of benefit because all that AI demand is going to software companies, and that software, as Dan Ives said yesterday, which I'll play his clip about what he said about the boot camps, is going to companies like Palantir. And so to me, if Sam Altman wants to build that type of a infrastructure in the United States, it means there's a shit ton of demand. If he's not just trying to pump the valuation, if there's a shit ton of demand, then that means that companies like Palantir are going to get that demand. It's just obvious, right? It's not something that's conspiratorial. It's not hypothetical. It's just where the market's going in the context of AI demand. Kelly says, do you still have your TFC options? I do. I have the TFC options. And yeah, I have 70 spreads on TFC. Those are up about collectively 40% right now. So if those 70 spreads play out, meaning TFC gets to like 45 by January 2026, this will be worth about 80 grand from an initial investment of about 25 grand. So a little bit of over a 3x, which would be nice to see. And so we're holding it because I think the Fed's going to cut rates. I think loan losses are going to come off their books, and I think the stock's going to get to 45. And that's my thesis there. Josh says GPT-4 is ahead of every LLM. GPT-4 is the only LLM that can consistently help with complex finance, calculus, programming, etc. I agree, Josh, but those days are numbered. Those days are numbered. Like GPT-4 will not be the only LLM that is consistently ahead. Maybe they've got another 6 months, but I mean, Gemini is coming for them. Anthropic's coming for them. Like there's companies coming for GPT. Llama's coming for them. I agree. It's still the best so far. It is one I've used Gemini, and Gemini's trash compared to GPT, but it's not like that's a moat that's not going to last. It's not like that's a moat that's going to last forever. Right. In my opinion, I think it'll get there. Amit, can you give a visual of the spread? Yeah, I'll give a visual and a spread in a second. Shem Pasta says, question, do you have an options beginner course or something? Shem Pasta, let me make it very clear to the 800 people here, just so everyone hears this. I will never sell a course on this channel, ever. So if I do an options beginner anything, which ironic you said this, I'll probably be posting it on this channel. So make sure you subscribe to this channel because it seems like, a lot of people want it. If I talk about options on a very beginner level, it'll be on this channel. This is my separate channel. I think we're going to rename it Macro Jackson, but I will never sell a course. So you will never see me sell $597 to learn about what you can look on Investopedia. But if you need someone who can communicate it in a very, Macro Jackson type of way, I'm your guy. And so I'll try to get those videos out there. I will try to get, probably not this week, but next week, as you're not the first person to ask, I'll probably try to get very beginner basic option videos out there that hopefully can help a little bit. So that'll be out on this channel. And you guys can check it out. But yeah, me and TJ talk options as well. Yeah, me and TJ are doing an option thing. But I noticed with me and TJ, it's still a little advanced at the end of the day, because me and TJ are still discussing some high-level strategies, even though I think we're doing a good job of breaking it down. And that podcast will return this week, probably on like Thursday. But it's not like someone literally holding your hand and walking you through the very basics of it. And so I think there is maybe a need for that. And I have no problem doing those videos on the second channel. And so we'll put it up there. Okay, JOLTS data. We should have JOLTS data. We should have JOLTS data coming up. Let's see what we got on JOLTS data. We do have home price data that actually went up a little faster than expected. So we'll talk about that. But let's see the JOLTS data. It should be coming out literally right now. Okay, here we go. We got it. Here we go. These are big numbers. Let's look at the market in a second. So here we go. JOLTS data for the economy. This is the jobs openings report. How many jobs are open in the United States? Okay. Wow. December, we had 9.026 million jobs open versus 8.7 million jobs. So we increased by about 250,000 on jobs. Huh. Does the market like it? S&P is like flat. Market's not really having a major reaction to it. I think that's bullish, because that means there's more jobs available, right? Like, that's the argument. If we had a lower JOLTS report, a lower amount of jobs, that means more people would be employed, but there would be less available options. So that would be, I guess, good for inflation, technically, because if there's less jobs, more competition for jobs, then wages don't inflate. If there's more jobs open, that could be interpreted as bearish, but I think it could also, to some extent, be interpreted as bullish, because that just means there's more opportunities for people to get jobs. Interesting. Let's see what other people are saying. What else are people saying? I think that's, I kind of think that's bullish. Am I wrong on this? What do you guys think? Is that bullish or bearish? Not bullish. Looking at red candles. The red explains that it's not bullish. Pay more to fill jobs. Yeah. I mean, look, that's the typical bearish argument, that if there are more jobs, then that means there's less competition for those jobs, which means that employees have to raise wages. It's 250,000 more jobs. It's also not a small number. It's definitely not a small number. Yeah, we're seeing some red candles here. Let's go to the NASDAQ. Where's the NASDAQ now? NASDAQ 15,000. Yeah, it's red, but it's not that red. It's like 0.3% red, 0.11% of the S&P. It's not like the market cares about it that much. It threatened wage price spiral. Yeah, so that's the bear case. So the bear case is more jobs basically means that there's less competition for wages, because people can say, all right, McDonald's, if you don't want to pay me $20, I'll go to Burger King. They might pay me $20. And then, that's an example. And then Burger King has to pay $20. And then their burgers have to get more expensive for consumers like you and I. And then we have more inflation because of wages that are going up. But it's a nothing burger. It seems like a nothing burger. Speaking of burgers, it does not seem like it's that intense at all. I mean, at least the way the market's reacting, it definitely does not seem like it's too intense. Cause Why Not said, this is bullish to me. I view the main risk of the market to be a recession. Inflation, my view, is over. Recession is the real fear. That's a good point. I mean, if inflation is over and that's not a big deal, then the real issue here is recession, not inflation, right? So something that is potentially inflationary, like wage price spiral, that's probably not going to happen, is less of a concern. More of a concern is unemployment, which this is definitely not pointing to unemployment. I mean, you got 9 million jobs open in the US of A. It doesn't seem like there's that hard of a, an unemployment scare, at least in the broader ecosystem. Okay, let me show you guys one of the TFC option plays I had, because someone asked for it in the chat. So this is what I'm looking at right here. Okay, so these are TFC calls. Right now, these calls are up 70%. So they're up about $12,000. So these calls are $32.5, $45 spreads. I bought the 32.5 call and I sold the 45 call on top of it. Why didn't I buy a naked 32.5? Because the premium would be higher, and because if it's until 2026, I don't really need to worry about it getting above 32.5. It was already in the money, but I wanted to reduce the premium by selling a call on top of it, which is like more bearish on top of the bullish. That decreases the premium for the overall spread. And that got me an average spread price of $3.68. Now, this was $3.37. If you guys remember on a couple of market streams like last week, I said I was heavily DCAing into this TFC position. So I was paying 500, I was paying 450, I was paying way above my average. But in November 14th, I bought enough at like the 330 range that it only increased my average by like 30 cents. So it's at 368. The current cost for it is at 482. As you can see, I was just up 12,000. Now I'm up 5,000 because 2 seconds ago, it was at 620, the average price of the spread. So the spread is incredibly volatile. This is why my portfolio can move up and down so much. But this was up 12,000 like 30 seconds ago. Now it's up 6,000. Now, if we simulate the returns on this bad boy and we say, okay, TFC, by 2026, I think that TFC can get to $45. I've done a lot of due diligence on why I think TFC can get to 45. I bought these when it was at 30. So it was a $15 risk. Now it's at 38. So we're a lot closer. If I think it gets to 45, then if I hold out until the end, this is one of those spreads that's going to print about 45 grand. And then I have another one that'll do about 25 grand. So it'll be about 80 in total. But that's what I'm looking at here. Now my goal is to probably not wait until this long. I would love to, let's say TFC gets to 40 you're talking about, early January 2025. That's close to 20 grand. Even by the summer, that's close to 15 grand. That's not the worst thing in the world. If we get to 45 by the summer, which I think is very possible if we have 4 to 5 rate cuts, you're talking about 30 grand in the summer or by November. So I probably would get out of here if I'm up 30 grand by the summer. But the thing is, there's not that much theta decay because we've got 2 years on these bad boys. And that's why I love leaps. Leaps are awesome. Leaps are super, super awesome. You have so much time. Even people are like, oh, why did you buy 2-year expiration SoFi leaps yesterday and sell them for 30% gain? Because let's say SoFi shitted the bed on earnings. Now, in hindsight, it sounds super awesome to be like, oh, well, SoFi was always going to crush. It's like, yeah, like, thank you, Captain Genius. After earnings, it sounds, when it's up 25%, it's like, oh, of course they were going to crush. But what if they didn't? If I had bought short-term expiration calls, I would have lost all the money. Whereas I would comfortably put in 5 grand into those options 2 weeks ago because I was like, even if SoFi shits the bed, they're not going to shit the bed for the next 2 years. And so that's why I love playing with leaps. Now, the gain on the $8 calls expiring on February was 155%. My gain was 30%. So, like, yeah, I took less risk. I made less money, but that's just the nature of life, right? Like, you have to do risk mitigation. And my risk mitigation was simply buying long-dated leaps and trading them within 2 weeks. So, to me, that's how I think of it. And I could have got more than 30%. If I'd been a little bit more patient, it probably would have been closer to 50%. That would have been a really nice gain on the leaps, given the stock was up 20%. But, I was kind of afraid that the stock was falling. We saw some nasty dips, and my PTSD with SoFi is that when this falls, it falls pretty bad. So, nonetheless, that's ultimately how I played it and why I played it and why I did leaps on TFC. Palantir 1718, Nvidia 630, Microsoft 410, CleanSpark 860, Enphase 109, SoFi 917, still maintaining above that $9 range, S&P 490, Tesla 193, and Robinhood down about 1.99% at $11.08. All right, not bad, folks. Palantir 1713 or 1719, and S&P at S&P, where is the S&P at to end of the day? S&P's at 490 and 74 cents. Captain Genius. Is that the wrong phrase? Is it not Captain Genius? Did I mess up that? Oh, it's Captain Obvious. What? I feel like, I should have known that. How did I? Damn it, dude. How did I mess up Captain Obvious versus Captain Genius? My mind is just running with things all day, and there's just things inside of it. And sometimes I blurt this stuff out, and because I sounded pretty damn smart when I said Captain Genius, and I got it wrong. It was Captain Obvious. It was Captain Obvious, Captain Smarty Pants. All right, I think that's it for me. We gotta do word of the day, dude. We missed word of the day twice yesterday. You guys didn't effectively warn me in the chat. We missed it on the open and on the close. So I think we got to do 2 words today. Oh, what a word of the day. This is great. This is a great word of the day. Let's look at this one. Here we go. Word of the day is imponderabilia. Imponderabilia.
Imponderabilia.
Imponderabilia. What a hell of a word, dude. What a hell of a word. Things that cannot be precisely determined, measured, or evaluated. Imponderabilia. Wow. Throughout history, artists have tried to capture the imponderabilia of human emotions. The philosopher contemplated the imponderabilia of existence, pondering questions that had no easy answers. This is a word I'm using. This is absolutely a word I'm using. This is happening. This is going to be a word. So it's something where you're not it's something where it cannot be precisely determined. Okay. So it basically, in the context of the Fed, we have no idea. We are, how do we use this? It's a plural noun. The philosopher contemplated the I am contemplating the imponderabilia of how JPOW is going to act tomorrow. We can use this with stocks. We can say, we're just thinking of the imponderabilia of, it's just such a pretentious, douchey word, dude. Because if you're with your friends and you're just like you're talking about something you're not sure of, and you're just like, yeah, the imponderability of this is just so incredible. I mean, they would look at you and they would be like, this guy's a douche. And I kind of like that feeling. I really do. So next time we don't know exactly what's going on with Google's ad revenue or Microsoft's cloud sales, like the imponderability of Microsoft's Azure growth, it's like there it is. There it is. That's what we got to do. That's great. I love this one. I love this one. This is awesome. Kelly says, like my love for you. Aw, that's cute. Kelly says her love for me is in it's imponderability. It's the same, Kelly. My love for you is in imponderability. I'm using it like a noun, but it's supposed to be a plural noun, so it sounds weird when you say it's my love for you is imponderability. See, that doesn't sound right. I gotta learn how to say this word better, but I agree, Kelly. Same for you. It's immeasurable. By the way, she sent me this. I got to show you guys. She sent me this picture yesterday, dude. I made it my background. This is the cutest picture ever. Look at this. You got glasses and you got these bunny ears. This has got to be the cutest picture ever. I didn't even know Kelly wears glasses. I mean, she told me, but she never really sent me the picture. I was like, oh wow. We started on Snapchat because for some reason we're on Snapchat now, and now we have a Snap streak. And I haven't done Snapchat in years, so I'm like, all right, we're doing Snapchats every day. We're doing Snapchats now. That's what's happening. So I got a glass of Snapchat. It was cute. Bailiwick is the next word of the day.
Bailiwick.
Okay, not Bailiwick, bailiwick. Bailiwick refers to a domain or sphere in which someone has superior knowledge or authority. Bailiwick. Interesting. I like that word.
Bailiwick.
Why is he saying it like though?
Bailiwick.
He's saying it like he's in a hurry. Bailiwick. Bailiwick refers to a domain or sphere in which someone has superior knowledge or authority. Okay, I like that one. Bailiwick. Bailiwick. I don't know how I would use that. Imponderability is way better, but bailiwick, someone who has domain knowledge or expertise. All right, we'll use that one. Kelly replaced Carp. Yeah, dude, Kelly replaced Carp. I'm sorry. Now if Carp puts up 30% earnings guidance, sorry, Kelly. Sorry. If Carp comes up with even 25% earnings, it is what it is. Where this wallpaper is getting replaced. You know what I'm saying? We're not that's not even thinking about 2 seconds, but the Carp's not doing that yet. So we need to see until Carp's doing that. Time to buy Snap stock? No, we're not buying Snap just because I used Snapchat yesterday. Even though their AI subscribers is definitely growing. Snapchat 1670. The time to buy was at $8, and that time is gone. UPS cut 12,000 jobs. Yes, we talked about today. UPS cut 12,000 jobs. Their earnings kind of sucked. So that is one thing to take into account in the context of unemployment and the overall macro. All right, guys. So we'll have the market close at 3:45. It'll be a long market close today. So 3:45 until probably 6, because we'll have Google, Microsoft, and AMD at the bell. So this is a big one. This is an important one. Please make sure you're relaxed. Please make sure you have some food. You have some drinks. You're going to be with me for a good 2 hours discussing what's going on in the broader markets. This is a very big day for earnings. No matter what stocks you own, this one matters. And so we'll be discussing that. We'll be streaming Google. We got 500 votes. 56% of you want Google, so we'll do Google. But I'll be looking at Microsoft transcript at the same time, and I'll put in quotes in the chat from what Satya is saying. If Microsoft is good, then hopefully, we don't have to worry too much about it. But if it's a little iffy, then we'll get some of those quotes and we'll see what's happening. All right, that's it. Thank you, everybody. I appreciate it. Kelly says I'm making my background Carp. He does it. Kelly has a better average on Palantir than me. So yeah, if Carp gives us 30% guidance, you gotta make him your background as well. How about Captain Jackson? All right, I'm done. The jokes are becoming enough. Macro Jackson signing off because SoFi got gap profitability. Thank you, everybody. Bye-bye. Have a good one. I'll see you at 3:45. Don't miss it. We'll be here for 2 hours. Get some food, and we'll be back in a couple of hours. Bye, everyone. Have a good one. See you later.